Okay, I made it live. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I given part 1 of tracking live the Forex market together webinar between 8 and 10:50 GMT. Now I am going to give part 2 of the webinar. It is a continuation of the earlier webinar. And actually, I am trying to track the market together with you during that of the European as well as US sessions of today. Between 14 and 15 GMT, we will try to track the market and find out how exactly the players have made the moves in the market. So we try to understand the simple live market tracking technique using the initial lows and the highs, identifying the type of moves their players are doing it, and also correlate the market reading with that of the forecast developed using a specific statistical algorithm. And also we'll talk about that of the trading strategy, how it is in a position to eliminate the risk and also eliminate the fear in our mind. So during this particular webinar, in the part 1, I took some positions during that of the European session, and also I just posted it here in order to review and discuss with you how exactly the market has made the move and what happened to that of the positions. I was telling you that Euro and GBP are not taking the positions because they already gained level and subsequently they may make a small gain. But instead I had taken the position in other currencies. First, one of the thing what I took is actually a sell limit order. I kept it at 1.4580 in the case of Euro CAD because when USD CAD has breached the initial low and stayed below there and also made about 89 pips negative net change. So I was explaining to you that they will make further drop, and that's what happened. So, and then subsequently when I kept the sell limit order, it was not filled. I just modified and took a sell order at 1.4572 because they were not gaining more. Then subsequently, the case of EuroCAD, they have come to that of 45.80 again. It dropped to 45.34, and I booked the profit at 45.35 with 37 pips profit. Then they again raised it, and again we can take a sell position because they are just trying to make the wide range swings from that of the low to that of the middle level in all currencies. Now in the case of CHF, I was explaining to you that they are just holding the market below that of the initial low they set for more than 2 hours, they are likely to drop. So I modified the sell instead of 97.80 to 97.78. And then when they made the drop to the top 97.60 or 58, I booked the profit around 97.60. Yeah, and 18 pips profit was booked, but that was not a very significant drop. Then in the case of Australian dollar, again 77.08, I kept the buy limit order. They are not filled it. Then about 8 pips higher, 77.16, I took the buy order, then buy position, and then subsequently it went up to 77.56. I closed it around 77.52, 77.52 with 36 pips profit. So after closing all the positions, USD was filled at 101.22. Then subsequently market came down to 100.97. Fortunately, the hedging was not filled. Again, they have gone up to 111.27. So I just closed it with 5 pips profit because I wanted to close all the position as a session trade. session-wise trade, that is, take the position and close the position within the same session. And then subsequently, you find that Euro and GBP, they just made the drop again. And in the case of yen, they started gaining the level after making a downward move. And also they are holding around same level where they started during the European session in the case of USD CHF and USD CAD. And also Australian dollar around the same level they are holding it now. So when you look into the market, so all positions I closed it with nominal or moderate profit. So we will just review the market again during that of the US session. So during the US session, if you see that Euro went up to 101.90 towards the close of the European session, and then subsequently made a small dip during start of the US session. And our trading strategy is wait for 30 minutes from the start of the session. They are not breached the initial high or initial low. Near that of the high, we'll take a sell position. Near that of the low, we'll take a buy position. But the forecast says, the derived forecast says that swing and rise is expected during that of the European as well as US session. So today is 10th. During the European session, swing and rise. Again, during that of the US session, they are expected to make the swing and rise move. So in such a situation, when they are holding it, above that of the initial high, then we have to wait for the market to go up. Nominally, dip may be seen for about 5-10 pips, but the gain is sure during this particular session. But in the case of GBP, they just went up to 1.3095 and came down to 302922 and then subsequently gained. But in 30 minutes, they did not breach the initial low. And they are holding in the middle level between the high and the low, and they are likely to, and they went above that of the initial high for about 4 pips and then again dropped it. So they are likely to revisit the high. So you can take a buy position if you want in the case of GBP. And in the case of yen again, they are expected to gain, they are expected to make a contrarian move. You can take a buy around that of 101.22 and they are likely to gain the level again along with it of Euro and GBP as a contrarian move. And in the case of CHF, they are expected to hold and make sideways move around 97.60 and not a significant trade opportunity might provide. And in the case of Canadian dollar, they came down below that of 30.52, the initial low, and went up to 1.2990, and they come back to that of 1.3045 and hovering around this in order to make a further downward move because it's already made about 80 pips negative net change. They are again expected to make further downward move. In the case of Australian dollar also, they went from that of 0.7707 and came down to 7727 and then started gaining the level. So they are expected to continue the gain during that of the US session also. So when you look into that of the forecast and the market reading, we are able to understand that they are expected to make further USD gaining move, USD weakening move in the case of the numerator as well as denominator currencies, excepting the USD yen. There they could make a USD gaining move, and CHF they could make sideways move. So this is what we read with the help of the market reading technique by comparing the initial lows and the highs, what we have noted down around 330, and try to compare it with that of the current condition. Now we are able to understand, even though we noted down the initial lows and the highs around 330 GMT, now it is 14.09 GMT. Still, we are in a position to compare the level and try to understand what the players are trying to do it in relation to the initial lows and the highs. So these initial lows and the highs are valid for the till end of the day. Then tomorrow again during that of 3:30 GMT, they will set the initial lows and the highs for the next day, depending upon the trader's pending position, depending upon their intentions. they will try to make further upward gaining move or a downward moves or swing or sideways move, whatever they want. They will try to do it depending upon how far the traders are participating in the market. So every time the players make the moves in the market, depending upon the traders' participation. That is why you find that exactly by 13 GMT, they just went up to the high. During the gap time, they just made a higher level swing. During the session start time, 13:30 to 14 GMT, they made a quick drop. They were holding near that of the high during that of the gap time, indicating that they wanted to make the swing on the downside before making further rise. So that is what they had done it. In the case of GBP and Australian dollar, they made an optimal downward move, but in the case of euro, they made a small dip. So that is how they show variation in the market as a swing. Then subsequently, we noticed that till 14 GMT, they are not breached the initial lows. So that means they are not really frightened anybody who has taken a higher level long, but they just made the drop in order to induce the long holders to liquidate the long position before making further rise. That is what we understand. Then we always keep the trading strategy handy and we keep the hedge order instead of stop, so that will be the risk limiting factor. If it is not hedged, then we will try to keep stop at entry and remove the hedge order. In the event if it is hedged, we watch for 30 minutes and try to find out what the hedge is making, whether making a profit or make the loss. Accordingly, we take the appropriate decision of closing the hedging and keeping another hedge order, or we try to book profit in the hedge and do the reversal trade. So we will note down the initial lows and the high and also try to find out what sort of moves they are doing it. So session start time, they had done the swing in the market. With the help of the live market code page, we are able to understand. And 13 to 13:30 is the gap time before the start of the US session. US session, the early session is 13:30 to 15 GMT. So we wait for 30 minutes and try to take an appropriate decision whether we continue to do the buy and sell or do the contrarian trade or a sell and buy. So as the forecast says, the market is expected to go up. So we wish to do the buy and sell trade in all these numerators, and also we'll try to take only in the case of Japanese yen the buy position, or you wait and just to do only with regard to the numerator currencies. So I explained to you in detail the type of moves they are doing it in the market. And one of the additional move is extended stop and. The extended stop and move is a downward move which happens during the early part of the day and they reverse it on the same day. A stop and is for about 15 to 25 pips, and the extended stop and they do it as a deep downward move, and then within the same day just a reverse in a matter of about 2-3 hours or maximum within 2 sessions and go above and continue to rise, and that extended stop and move is an indication for the shift in trading zone. They also do the extended stop and move during the month end and month beginning time, and also during shift in trading zone time. So these are all the type of moves we need to understand. Hedging is not available in US trading platform, and if you want to, then you have to open an account in some other trading platform and try to make use of the hedge. And in the event if you are using the stop, then don't keep away the stop widely from that of the entry level. Accept the stop at an optimal level of 30 pips. If it is stopped out, you re-enter and try to book profit in the market. You will be able to really find that you earn back the last money. But once you are stopped out, if you become fatigued, mentally fatigued, and you are not able to take appropriate decision, then you may not be able to recover the loss. And this is what we need to understand in the market. Then now let us try to find out what sort of trade we can do it in the case of US session. The case of euro, they just made the dip to 101.117475 level. So we'll take a buy position or buy limit order. We keep 5 pips below and see whether they are able to fill the order and exit. At 45 pips, then stop 30 pips below 1.10. Sell stop order. Similarly, in the case of GBP, we'll try to take a buy limit, buy order 1.30 to 8 with the door. We'll keep the high as the exit, 3090, the initial high, and the hedge order 30 pips below 1.2998. So these two positions we'll focus on and try to see how exactly they are handling the market. If you got any doubt, you can ask me over the question and answer window. I'll be willing to answer those questions. So try to understand how to read the market from time to time and read the intentions of the players by tracking the type of moves they are doing it. And don't always have an opinion that I have a fashion to trade in euro, or I always like GBP. This sort of sentiments, if we develop, then when it goes against, which will demoralize you, even though you come across various other great trades in the market. And suppose you are focusing only on GBP, and suddenly GBP has made a big drop, and then if you immediately develop a feel that euro could also drop and take a sell position, as a relative comparison, it may not happen. GBP is a currency which they make quick moves because of lesser volume in order to create the market sentiment. So don't think that they have to necessarily drop euro. So always they make differential moves in the market. It is not the similar type of move or the same move. They make differential moves in different currencies from time to time. That is why you come across the pip variation. Even though all currencies are showing the USD weakening move, but still you come across the variations with regard to the number of pips they have made, the move against the US dollar. So this we need to understand, and only then we'll be able to effectively trade in the market and earn money from that of the market. And you will be in a position to identify the right currency wherein you will be able to book optimal profit. Because ultimately, whether you trade euro or GBP, the profit is profit. The profit will be in the currency in which you opened the trading account. Suppose you have got a US dollar trading account, whether you trade euro or GBP or yen, ultimately the profit will be added in the form of US dollar. The pip value in US dollar will be added to your account. So in the same way, you have to find out, you should not have a sentimental attachment to any currency pair. Instead, you just watch them as tradable instruments, because these are all nothing but the ratios. They are all tradable instruments, and whatever the position you take it in the market, and that has to be offloaded in the market. You have to close the position in the market. You cannot carry it. You cannot just convert and take away the money from that market, the actual position. You have to just close the position. Only the profit or the loss is yours, but the position is not yours. It is temporarily you have taken that, and you have to close it in the market, or you have to just offload it in the market. So keep that that this is only a trading instrument, and you try to buy or sell depending upon the context, depending upon the market sentiment the players have created, and how exactly the players intend to trap the traders. Based on that, you try to take the positions. So as I told you that GBP is the currency, they use it in order to create the market sentiment. They suddenly dropped it between 13:30 and 14 GMT as if it is going to have a free fall. And later on, what they normally do is they make one drop and just hold it around 1.304550. And if the traders take a buy, okay, it's a buy limit order or a good level to buy and support it well, then they make one more drop and then create the fear. So those who have just bought it in a hurry without waiting for the time to get over, then they may feel that it might drop further and close the position later on. See that they closed it during next dip and then subsequently it started gaining. So this sort of small tricks, what the players are doing it, you should be able to read it properly. Then you will not have the market fear, or you will not develop the fear and continue to ask anybody who is guiding you that what will happen to euro, when it will reverse, when it will go up, and you will not ask such impulsive questions. Because by asking impulsive questions, you only show that you are really afraid and you are really uncertain about the market moves. And when you are uncertain about the market move, it is very similar to that you are sitting in a car asking somebody who is sitting elsewhere over the phone whether I have to go right or left, right or left, right or left, whether I have to go straight or slowly or fast. And if you ask what the other man can do, only you should be able to sense it and then drive accordingly. Even though it will be a strange place for you to drive the car, then you cannot continue to ask the person who is sitting elsewhere. If he is sitting along with you, probably you can ask him. So you have to understand that the players make such moves in the market in order to handle or address to various positions taken by various traders. No, the players need to make the moves in the market to continue attract the traders to take positions and continue the traders to develop fear and liquidate the positions. Only then the players continue to earn money from that of the market. So you can understand how difficult the task is. So you should be able to really appreciate what they are trying to do in the market. But only advantage for us is they have no other trick other than whatever the trick I explained. So if you read the tricks carefully, then you will not be fooled. They try to do it like the magicians and pretend as if the market is bullish, market is bearish and things like that. They ask somebody to make a post that bears are having a control over the market, bulls are having control over the market. Like that, when different people give a different interpretation, you think that, oh, the market is under the grip of bears, so it may not be able to rise. Then suddenly they will make a rise. Then it will become a surprise. Then we ask the person who was telling that the bears are taking the control, then he will simply say that it is a dead cat bounce back. Okay, this time dead cat bounce back, it has come down, fine. So it is going to drop again, let me take a sell. Then afterwards it goes up and goes up. And when you ask him, no, technically the market has become oversold, so it has gone up, I cannot help it. So that is how we will give that interpretation. So as long as you continue to ask somebody for your trades, then you will not have your originality. It is something like, there is a saying, if at all you are hungry, only you can eat and nobody else can eat on your behalf. If you are having any sickness or illness, you can only undergo the treatment. Somebody else cannot undergo the treatment and you cannot become all right from such sickness. So if you want to earn money from that other market, you should develop the market sense, like a driving sense. If you develop the market sense, you are able to maneuver the market carefully and try to earn. For that, I was telling you, it is not the forecast which is going to help you to make consistently the profit. It is actually the trading strategy. So with the help of the trading strategy, you will be able to really make good money from that other market. So if you got any question, you can ask me. I'll be willing to answer those questions. If you got any doubt with regard to the trade strategy or any other point, I'm willing to answer those questions. So reading the type of move is very important in the market. That how they are making the stop and the false move, which happen in less than 30 minutes, and also extended move, which happens more than 30 minutes, up to 2 hours. And always they alternate the extended move with that of the intentional move. In a day, if they start, during start of the day, let me explain with the help of the time frame. Okay. Now, in a day, during that of the Japanese session, they start making upward and the downward stop and settle around that of 3:30 GMT, the initial lows and the highs. Then they handle the crosses during the mid session, and during that of the late session, they either breach the high and go above or breach the low and go below, as widening that of the spread between the high and the low. So they set the initial high and the low. Subsequently, they breach the high or low by end of the Japanese session. Then that way they make the stop, and then during that the gap time they make a false move. They want to drop during that early part of the European session. They gain quickly between 7 and 7:30 GMT. That means they wanted to make a drop. So you can take a sell as a gap time stop, gap time trade, sell as a contra trade. If they rise, you sell. If they drop, you buy. The opposite, they will do it during the early session. And then during the mid session, they will make the swing near the high or near the low or contrarian move to handle that crosses. Then to the late session, they come and there might be data release, etc. during that particular time around 12:30 GMT or 11 to 13 GMT. At that time, they will try to make a false move before the data release. They drop or the rise before the data release to indicate that opposite they are going to do it as a quick move till end of the session. So you have to keep it in mind, whether it is non-farm payroll or anything for that matter. Till 13 GMT, they will make that move. Then afterwards, they have to induce the traders to commit wrongly the positions. So what they do is, see, last time during the non-farm payroll last Friday, you would have noticed that they made the drop in the case of Euro, and GBP are bounced back during that of the gap time. And afterwards, again, they started making the slide during the early year session. And then people might have thought that they are going to continuously drop during the other year session. But during the mid session, they have been holding and slowly buying and started gaining during the other late session. So this is what they do it. They create the market sentiment. If the traders have taken in line with that of the market sentiment, they'll simply reverse the market. That becomes the intraday reversal. Sometimes you come across the weekly reversal. Monday they make the false move, and Tuesday they make the sideways move and pretend as if they are going to make a drop. Wednesday they start gaining the levels. So just acting against that of the sentiment what is created. Thursday and Friday suddenly they make the upward move and show, okay, that is the trend. Then if you think that the market is going to have an upward trend, then on Monday they will make the week beginning false move, again make a drop, telling some story. And especially during the weekend, during start of the Japanese session, sometime they will use the rumor or any other event which has happened on Sunday, and then they suddenly make a drop in the case of Euro or GBP, or rise depending upon the context, and then try to make the week beginning false move from there. And then subsequently they make the intentional move during the rest of the week. So every time they make a specified type of moves, we need to understand how they are doing it. Then you find that when you can do the swing trade, when you can do the position trade, and how exactly when you use the hedging, you can do either way trades, or you can simply reverse the trade, etc. That sort of appropriate trading decisions you can take it once you understand the market well. If there are any questions, kindly ask me. I don't find any question coming forward. So in that case, I will just conclude the webinar. So these are all the positions I have taken. You can just watch what happened to those positions. The euro also got filled, now 70. It becomes a position. And slowly at the end of that session, we can find out how they gain the levels, and then we are able to book profit. So this is my website address, iknowindices.com. If you want to know more about me and also about my trading strategy, you can visit the website and find out. And if you want to contact me and ask me any of the details, dr@i-knowindices.com is my email ID. Then if you want to talk to me over Skype or just have a Skype chat, then I know indices without hyphen at hotmail.com is the Skype chat ID. And Yahoo chat is iknowindices@yahoo.com. And my phone number, this is the India code number, it is Chennai code number. And then this is the phone number. Two phone numbers are given. This is my mobile number for your. So don't misuse it. And if you have any genuine doubt, you can always call me. You can contact me, and I'll be willing to help you out. If there are no more questions, then I'll come back on Friday and give you the next webinar, Asian Session Live Market Analysis on Friday as a review part of it. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and also you people who come here to listen the webinar with interest. And I want you to get rid of the market fear by understanding how the market is being manipulated from time to time. Then accordingly, if you trade wisely and calmly with the patience, we'll be able to really make good profit, consistent money from the other market. So wish you all happy trading. See you on Friday.